Guys and girls, I welcome back all of you to this session on capital gains that we are doing. We have nicely successfully discussed many things, basics as well as some special cases also we have discussed. Some more special cases to go and also exemptions. So that is the agenda for this part of this particular day, this particular session for this night number 7. Okay, let's start. So when you transfer immovable property, there is one special thing that is to be considered for determining the full value of consideration. Do you know that you cannot directly take full value of consideration as the sale price? You will compare that with stamp duty value. Okay, if stamp duty value is in excess of 110% of actual consideration, then you will take stamp duty value as FVC. Okay, just to give you example, what happens, suppose 10 lakh rupees is your actual sale price. Okay, 10 lakh rupees is your actual sale price. Stamp duty value is 10 lakh 50,000. Don't directly take 10 lakh 50,000 as FVC. Okay, what is 10 lakhs into 110%? 11 lakh. Stamp duty value is only 10 lakh 50,000. That is not exceeding 11 lakh. So your actual consideration will become FVC. In short, government is kind enough to allow you to compare stamp duty value with 110% of actual sale price. Got it? Just 2 to 3 years back, what they used to do was you had to compare actual sale price and stamp duty value and take whichever is higher. But now they are kind enough, they now say that you take your actual price, calculate notionally 110% of that, compare stamp duty value and that. If stamp duty value is exceeding that also, that means your actual consideration shown is way less. Then neglect actual consideration and take stamp duty value. Agreed, all of you? Did you understand the point? Yes, wonderful, wonderful. So that was one point which I had to tell you in case of transfer of immovable property. Otherwise, I think all cases we have covered except slump sale. Okay, we will discuss slump sale also. What is slump sale? Slump sale is when you sell entire unit or undertaking for a lump sum consideration. Lump sum, you attach your value, say you attach value of 1 crore 10 lakh to your business and sell your whole business. It is called as slump sale. So you have not sold assets and liabilities individually, but you have sold entire business as a going concern. That is called as slump sale. Yes, single price is attached to the entire business unit instead of attaching individual price to individual assets. Okay, lump sum consideration. That is slump sale. In slump sale, what you will do is, sale value to you have less expense on transfer. Okay, in sale value, you remember, you consider fair market value also. If fair market value is higher, take that. And what will you take as cost of acquisition and cost of improvement? Now, cost of acquisition and cost of improvement is to be taken as, the net worth of the undertaking. Net worth means what? Okay, sorry, I was not audible for some part. I hope I'm audible now. So I was saying assets minus outside liabilities is net worth. So net worth will be taken as your cost of acquisition and cost of improvement in the slump sale. Okay, why we have to take net worth? We have to take net worth because we are not selling asset individually now. That's why. Now friends, assets minus outside liabilities, which assets we are talking about? We are talking about depreciable assets and non-depreciable assets. For depreciable assets, you should take WDV as per Income Tax Act, and for non-depreciable assets you should take, yes, you should take book value but excluding effect of revaluation. Agreed all of you? Pakka? Sure? Wonderful, wonderful. Let's go ahead now. So you understood how to calculate capital gains in case of slump sale. If friends, the unit is in existence for more than 36 months, it gives rise to long-term capital gains. If it is in existence for less than 36 months, it gives rise to short-term capital gains. Clear? Now, let's go ahead. Can we do exemptions? And then last we'll do is capital gains on transfer of shares. Okay, so before that capital gain on transfer of shares, we will do exemptions. Okay, assessee has to be given benefit. Okay, he should not be unnecessarily taxed, or he should be motivated to sell assets if it is for his benefit and if it is for overall benefit. That's why exemptions means, if right now I am staying in 2 BHK but my dream is to go in 3 BHK, okay, and I am going to sell the 2 BHK and purchase 3 BHK. So if I sell my 2 BHK at 80 lakhs and its cost of acquisition was only 30 lakhs, and if I end up paying tax on 50 lakhs, you know friends, tax itself will be 10 lakhs because on LTCG tax at 20%. Now you know what happens. It might not help me to take 3 BHK. Or, you know, don't you think government should encourage me here? Because I am trying to grow. So government says, if you are selling one house and investing in another one house within India, then we are going to give you exemption of the long-term capital gain amount that you are investing in new house. So section 54, my dear friends, is house to house. House to house means one house is transferred and another house is purchased. So Kashish, should that another house be purchased at any point of time, or is there any time limit for purchase? So obviously there is a time limit for purchase. So Aditya, before selling you could have purchased 1 year before. So prior 1 year prior to date of transfer or 2 years after the date of transfer you may purchase, right? And if you are going to construct a new house, then time limit is 3 years instead of 2 years. Is it clear? Friends, there is a condition: you should invest only in one house within India. Then only you can get this exemption. But good news is that once in lifetime of assessee where the capital gain is not exceeding 2 crore. If he wants, he can invest in 2 houses and still get exemption for investment in both the houses. Agreed? But if LTCG exceeds 2 crores, then new investment has to be in one house only. Kvisha, are all the points clear? Acha. Aditya, there is a lock-in period. Yes, there is a lock-in period. Ankush, lock-in period means you should keep invested in this new house for next 3 years from the date of its purchase. Yes. In case you sell house within 3 years, then whatever LTCG you have got, whatever exemption you had got of LTCG, that will be subtracted from the cost of acquisition. When you sell that newly purchased house, you will get capital gains. To calculate that capital gains, cost of acquisition will be reduced to the extent of LTCG earlier claimed as exemption. It's a big punishment, Kashish. When cost of acquisition goes down, capital gain goes up. आपको समझ में आया मैंने क्या बोला? Did you understand what I said? Yes. Within what time I am selling? Yes, if newly constructed house is sold, same effect. Same effect. Newly constructed house, if sold within 3 years from date of completion of construction, same effect. But what additional point I want to tell you or make you realize is that 3 years is the time limit for which you should keep invested, isn't it? If I sell property after 25 months from date of purchase, then what happens? Which gain I am getting? Gain which I am getting is long term, but still my exemption earlier claimed will be subtracted from cost of acquisition. Agreed? Because 25 months means within 3 years. Yes, wonderful, wonderful. So ये सब points आपको याद रखने. You have to keep all these points in mind in section 54. Then comes 54 EC. What is 54 EC? क्या है 54 EC? You are selling a long-term capital asset which is land or building. Kashish, yes. Kashish is asking question in relation to what we discussed earlier, that if house was sold after 24 months, say after 25 months it was sold, means post 24 months and within 3 years, can indexation benefit be claimed? Answer is yes. Because which asset you are transferring? Long-term capital asset. Yes, wonderful. Can we go to 54 EC? Understood, na Kashish? Only difference is that when you are calculating COA, COA will be reduced to the extent of exemption earlier claimed. Only that is the difference. Yes, wonderful. Okay, you had land, you had building, which is long-term capital asset. You have sold it. Okay, now you can, obviously if it's a house, you could have put money in another house. But if it is a land or it's a office building which you have sold and now you want to save money, how will you save money? By investing in NHAI, that is National Highway Authority of India, or Rural Electrification Corporation, that is REC bonds. You should invest money in these bonds. Within what time you should invest money in these bonds? You should invest money in these bonds within 6 months from the date of transfer. If you do that, what happens? Then amount invested in these bonds or actual LTCG, whichever is less, that gets exempted. So you had, friends, LTCG of 25 lakhs by selling a plot of land, and you invested 25 lakhs in bonds within 6 months from date of sale of that land. What will happen? That 25 lakhs will get exempted. So taxable long-term capital gains will be 0. If you had LTCG of 25 lakhs and you invested 20 lakhs, how much will be exemption? 20 lakhs. Yes. If you had 25 lakhs LTCG but you invested 30 lakhs, what happens? 25 lakhs only will be exempted. Well done. If you get interest on these bonds, that interest becomes taxable under the head income from other sources. Since revision batch, I am telling you all possible points. 54 section house to house was only for individual or HUF, but 54 EC is for any SSE. Even company, partnership firm, they can take benefit of 54 EC. समझ में आया? Did you all understand? One very important point here is, जो देखो आपको समझ में आना चाहिए, building, office building is a depreciable asset or non-depreciable asset? Office building is of course a depreciable asset. You know the rate of depreciation also, 10%. Now this office building was held for me for 5 years and then sold. Which gain will I get? Short term. Wonderful. If there is any gain at all, it will be short term under section 50. Wonderful. Can I invest this money in NHAI/REC bonds to get exemption of section 54 EC? Aditya, this is googly. Answer is yes. I never said that gain should be short term, long term. I said that asset should be long term. And I told you office building was held by me for 5 years. 5 years means more than 24 months. More than 24 months means asset becomes long term capital asset. आप condition को पकड़ो. You check the condition. Condition is land or building should be long term. Condition is never that gain should be long term. Understood? This is, please repeat. क्या हुआ? गूगली पे बोल्ड हो गए. Listen, Kashish, there is one condition in section 54 EC that land or building that you are transferring should be long term. Yes. What's the meaning of long term? Held for more than 24 months. Hey Ketki, 24, not 36. Land building के लिए it is 24 months, not 36. Okay. Yes. Okay. What I'm telling you, Kashish, is I am a partnership firm holding a office building for 5 years and then selling it. Can I claim 54 EC exemption? Answer is absolutely yes, because my holding of that building is for more than 24 months. So it is a long-term capital asset. Now why this point has to be told separately? Because arising gain might be short-term capital gain, but asset is long-term capital asset. Agreed? I had told this in main batch also. Obviously yes, no? In revision batch I am telling, means in main batch also I must have told this point. Okay, lock-in period is 5 years. If in 5 years you sell, then what happens? If in 5 years only you sell, then whatever LTCG is earlier exempted, that becomes taxable. Yes, in that year in which you are selling. Further, what important point I want to tell you is, you even cannot mortgage these bonds and take loan against that. One more point I want to tell you, Krisha, one more point I want to tell you, maximum exemption under 54 EC is rupees 50 lakhs. Yes, means on 31st March 2022, Krisha, you sold land and got LTCG of 80 lakhs. What is the time limit for investment? 6 months. Immediately on 31st March, you invested 50 lakh rupees in NHAI bonds, and then on 10th April, you invested another 30 lakhs in NHAI bonds. Actually, how much you have invested? 80 lakhs. But your exemption will be restricted to 50 lakhs. Understood? In short, 50 lakhs is ceiling limit for exemption. And it is ceiling limit for exemption even if you are doing those investments in 2 different financial years. In my example, you did investments in 2 different financial years. Still, it doesn't matter. You cannot get what? You cannot get exemption above 50 lakhs. Is the point very clear to all of you? Tell me honestly. Wonderful. क्या बात है? Go to 54F. Okay. Go to 54F. Aditya understood na 54 and 54 EC? Yes, very good. 54F. In 54F, you are transferring any asset other than residential house. So it could be plot of land, it could be jewelry, it could be unlisted shares, it could be anything. But other than residential house, and investment should be in house. Sold is other than house and investment is in house, and other than house, mind you, Shraddha, should be long term, of course. Long term capital asset it should be. Now, this section is strict. Why I'm calling this section strict? Because if you want to get full exemption of LTCG, then you should invest complete net sale consideration. In 54 and 54 EC, Chaitanya, if you wanted to get exemption of amount of LTCG, you could have invested only LTCG amount. But here you have to invest NSC amount, net sale consideration amount. फुल अमाउंट इन्वेस्ट करना पड़ता है. जो गेन हुआ ना, वो फुल अमाउंट इन्वेस्ट करना पड़ता है, तब जाके LTCG अमाउंट का एग्जाम्पशन मिलता है. I'll tell you what happens. 82,50,000 rupees is your full value of consideration by selling a plot of land. 2,50,000 is your expense on transfer. Net sale consideration is 80 lakhs. Index cost of acquisition, index cost of improvement is 30 lakhs. What's your capital gain? Your capital gains, my dear friends, my dear warriors, my dear students, my dear enthusiastic audience, is 50 lakhs. If you want to get exemption of 50 lakhs, you should invest 80 lakhs. If this was house to house, you could have invested only 50, got exemption of 50. But 54 F is strict. it wants you to invest 80 lakhs if you want to get exemption of full 50. Krisha, what will happen if you invest only 40 lakhs instead of 80 lakhs? Your exemption will be on Kashish proportionate basis. Proportionate basis means your exemption will now be of 25 lakhs. Very good, Ankush. Understood? Could we collect this? Lock-in period same. Time limit to purchase same. Like 54. याद आ गया सबको सब कुछ? Yes, wonderful, wonderful, wonderful. In short, एक फॉर्मूला बन जाता है यहाँ पे. Quantum of exemption under 54F is equal to long-term capital gains multiplied by amount invested divided by net sale consideration. देख लो, अपने एग्जाम्पल में डाल के देख लो. Long-term capital gains was 50 lakhs multiplied by amount invested was 40 lakhs upon net sale consideration was 80 lakhs. Yes, आप कर लो, आपको वही फॉर्मूला मिलेगा. क्रॉस मल्टीप्लिकेशन वी हैव डन. So I hope friends, to you all these sections of exemptions which were important are clear. 54, 54F and 54EC. Yes or no? Tell me honestly in the chat window. Yes, wonderful. One point I want to tell you, special matlab CGDA, capital gain deposit account. Do you remember that point? Time limit for me for investment is how much? For in-house in 54 and 54F, that time limit is 2 years / 3 years. So don't you think, Aditya, 2 years, 3 years can fall beyond due date of filing return? So आपको एक easy example, I'll tell you easy example, okay? With example you will understand. 1st January 2022, house is sold. Is it necessary, Aditya, that I immediately find new house to invest? No, that's why time limit given is 2 years. Now what happens? 30th September suppose is my due date of filing income tax return, but till 30th September I have not invested in new house. How to prove to government that I am going to invest in new house? Deposit the amount in capital gain deposit account. Do you now recollect the point? So now you will get exemption to the extent amount deposited in CGDA. Afterwards, what you should do? Afterwards, within 2 years from date of purchase, you should withdraw that amount and use it compulsorily for purchasing house. What will happen if you don't use it? Within 3 years from date of sale, then your LTCG, earlier claimed as exemption, will get cancelled. It will get taxable in that PY in which this 3 years expire. Did you understand? CGDA. Yes, wonderful. And friends, last thing which I want to do for today, because I know I have overburdened you a lot, but ये last चीज सबसे ज़्यादा overburden कर सकती है आपको. I want to make it as simple as possible. Let's see. बाकी चीजें तो आप कर लोगे, I am quite sure. Last thing that I want to do today is 54F and 54. For both you will get CGDA, because in 54F also time limit is 2 years / 3 years, na? So I was just answering Ankush's question. Fine. Friends, now clear your mind entirely and focus it on transfer of shares. There are two types of shares, unlisted and listed. For unlisted shares to be called as short term, they should be held for not more than 24 months. And for listed shares to be called as short term, they should be held for not more than 12 months. Agreed? Yes. Short term capital gains on transfer of listed shares is taxable at 15% under section 111A. Very good, capital A, but that's a small modification. Yes. And long-term capital gains on transfer of listed shares is taxable under 112A at 10% in excess of rupees 1 lakh. ये मत भूलो, in excess of 1 lakh only it is taxable. Is it clear to all of you what I told you just now? Sure. Now friends, don't think about unlisted. The mode of calculation, everything remains same. Think about listed shares. Okay, I think before that you must have understood कि bonus shares का क्या होता है, right shares का क्या होता है. Bonus shares are received by you free of cost, so its cost of acquisition is 0. But if bonus shares are allotted prior to 1/4/2001, then its cost of acquisition is fair market value as on 1st April 2001. Okay, ये सब क्यों पढ़ रहे हैं? It can happen you are selling shares today but which were allotted as bonus before 2001. Can happen in unique case, right? So we should learn it and then leave it, no problem. Most important part which I am coming to is right now this point. 2 years before, not 2, rather now 4 years before, life was simple as far as this point is concerned. Why life was simple, Shraddha? I am saying LTCG on transfer of listed shares was fully exempt. So life was simple for assessees also, for students also, for income tax officer also, but not for government, because government thought they are losing tax. Got it, no? They are losing tax by exempting this transaction. So government said, wait, we will tax it. कब बोला उन्होंने we will tax it? Do you know कब बोला we will tax it? 1st Feb, नहीं मुझे exact date चाहिए, वो उन्होंने बोला 1st Feb 2018 को. Yes, 1st Feb 2018. I was traveling to Udupi when I got this news. Then I studied it in detail. क्या है ये exactly? कोई है उडुपी से यहाँ पे? Okay, no. What happened is wonderful thing. ये मैंने एयरपोर्ट पे बैठ के एनालिसिस किया. I have got a nice memory of this analysis. देखो, there was a connecting flight, पुणे बैंगलोर, बैंगलोर मैंगलोर. तो बैंगलोर के एयरपोर्ट पे बैठ के नाइट में एनालिसिस किया. ये जो से नाइट वाले एनालिसिस होते हैं ना, बहुत अच्छे होते हैं. ओके, लिसन, व्हाट इज द पॉइंट? 1st Feb 2018, 1st Feb 2018, Chaitanya understood that whatever shares he has of ICICI Bank, now those shares are listed obviously. That time also they were listed. Now when he sells them, there is going to be tax. But 31st January 2018 नाइट तक उसका इंटरप्रिटेशन क्या था? His interpretation and planning was that whenever he sells them, LTCG is going to be fully exempt, isn't it? So he was in comfortable state of mind. Now 1st Feb government put a bouncer bomb on him that we are going to tax this LTCG. So his financial planning got distorted to some extent. Yes or no? So government said, wait, don't worry, we will allow you to exit safely without paying tax. How to exit safely without paying tax? We will allow you to consider fair market value of these shares on 31st January. So friends, on 1st Feb morning, assume its price is 200, and on 31st January night its price is 200. So his capital gain will be 0 literally. Means he can exit by getting LTCG of 0. So no LTCG for him, because government gave him nice option of considering what? Fair market value as on 31st Jan 2018 as cost of acquisition. So Chaitanya exit हो सकता है. Chaitanya can exit from few scrips मतलब shares which he had held long term without paying any tax. So is he happy now? Yes, he is happy now. That's the provision. In short, friends, for shares which are acquired before 31st January 2018, SSE has got option of taking original cost of acquisition or FMV as on 31st Jan 18, whichever is higher. Agreed? Itna simple, it is so simple actually. Got it? Aditya understood? Once more, once more will happen, but with example. Okay, you only decide. This was Yorker, googly, spin bowling, fast bowling, bouncer. You only decide. But I hope that after example you will be able to hit 6 on this. Example is like this. See, ये देखो, easy किया है. 4 illustrations I have put. कितने illustrations? 4. 4 illustrations in one chart. Why? Because we want to compare the cases. Original cost of acquisition of those shares, first take first case, was 100. FMV on 31st Jan was 200. First of all, did you understand, Aditya, why are we considering 31st Jan 18? Yes, because new law was to be applicable from actually 1st April 2018, but it was announced on 1st Feb. 1st Feb को बजट हुआ था. Yes. अब देखो, now see, 200 rupees was its FMV, and when he sold the share was sold for 250. Now Aditya, if government does not give this option, 1 minute के लिए सोचो, for 1 minute think, government does not give you this option, then for Chaitanya the capital gain will be 250 minus 100, 150 rupees. Chaitanya will throw stones on government, saying suddenly they have asked us to pay the tax on 150, isn't it? So what option has government given? Government has given option, take your cost of acquisition as 100 or 200, whichever is higher. So now Chaitanya can take it as what? As 200. No, Aditya, indexation will not be there. Why indexation will not be there? Ask me why. Why? Okay. You asked it, I assumed. Why? Already tax is at a low percentage of 10. That's why no indexation benefit. Okay, got logic? Okay, so 200. So now he will pay tax on 50 rupees. 250 minus 200. Agreed? Go to case 2. In case 2, his original cost of acquisition is 100. See, an interesting case. Fair market value is 200. By our logic, he should take 200, na? Shraddha, by our logic, he should take 200, na? As cost of acquisition. But if he takes 200 as cost of acquisition, check here the selling price is 150 only. So there will be a loss of 50. Don't you think ये फुकट का लॉस होगा? फुकट का लॉस होगा मतलब एसएससी का बेनिफिट फुकट का होगा. Loss in income tax is good because that can be set off. So government says ये आपको free of cost loss नहीं देंगे हम. आपका एक्चुअल कॉस्ट ऑफ एक्विजिशन कितना है? एक्चुअल कॉस्ट ऑफ एक्विजिशन 100 ही है, तो आप 200 लेके 50 का लॉस कैसे क्लेम कर सकते हो? तो योर कॉस्ट ऑफ एक्विजिशन इन दिस केस विल बी yes limited to 150 rupees. So your LTCG will be 0. समझ में आया? In short, एक sentence याद रखो. Remember one sentence. In this case, because of taking FMV as COA, you cannot have loss. I am not saying you can never have loss. I am saying you cannot have loss because of taking FMV as COA. In short, friends, when you are taking FMV as COA, FMV should not exceed FVC. Again, FMV should not exceed FVC. लिखा यहाँ पे सब कुछ. प्री समझ में आया? और कौन है? अक्षता समझ में आया? निखिल है ना? सुष्मिता, सुवेथा समझ में आ गया कि कुमा में चले गए? समझ में. Aditya has something to comment. He is typing aggressively, so it's directed towards Nikhil. They keep on pulling each other's leg. No? अच्छा कुछ नहीं है. कुछ तो था बट अभी मैंने बोला इसलिए. अच्छा, he must have messaged him on private. ठीक है, तो he was typing but it did not reach me. तो I am your teacher ना, so I understand. Okay, देखो now see. Original cost of acquisition is 100. FMV is 50. What will you take, friends? You will take original cost of acquisition because it is higher. Government ने क्या? Government back foot पे है ना? So government has given you option of choosing. You will of course choose whatever is benefited for you. You will go for 100. So your LTCG will be how much in this case? You are selling for 150. Your LTCG will be how much? बोलो जल्दी. Your LTCG will be 50. Wonderful, wonderful. And friends, last case, you tell me what will happen. Original cost of acquisition is 100. FMV is 200. You can take whichever is higher. You could have taken 200. But friends, एक याद रखो, 50 is your FVC. Twist in the tail. Twist in the tail, Kashish. Here can you go for long-term capital loss? Yes, क्योंकि आपके हक की प्राइस क्या है? 100. Can government deny you from taking 100? Because you have already paid from your pocket 100 rupees. Government cannot deny you from taking 100. So your what? Loss will be 50. So Aditya, understood? Yes or no? I am not getting. Yes, okay. Great. Understood, no? Very good. Wonderful. So this is what I wanted to tell you in today's session. Okay, I am going to now, as usual, close this and take a quiz of 15 minutes. Jisme it's a rapid fire. You please give the answers in the chat window. Let's see. Okay. If share was unlisted before 2018 and then it became listed, now it will be treated as listed only. Acha, only its way of finding FMV as on 1st Feb 2018 will change. Only way of finding FMV will change. Otherwise, you have to check its status when it is sold. So you are saying that now it is listed. Understood? Its status while transfer will be checked. Very good. So now let's start our question answers for next 5-10 minutes, whatever time. What is excluded from definition of capital asset? What is excluded from definition of capital asset? Personal effects, stock in trade, and one thing you have not written here, Ketki, what you are writing is not correct. Prachi, what you are writing is not correct. You have not written one point, rural agricultural land. And now my second question to you is, what is exception to personal effect? So therefore it will be part of capital asset. Yes. Now Ketki and who else answered? Prachi. Now you should answer jewelry, work of art, paintings, drawings, sculptures. Wonderful. Third question. If I have listed shares, what is the criteria for short-term capital asset for listed shares? They should be held for not more than, it is not less than, but it is not more than. So exact 12 months also will be short term. This also have to understand. Huh? Yes, very good. Okay. Which is the base year for CII? And what is the index for that base year? 2001-2 and indices is 100. What is the CII for the 21-22? Because 21-22 might not be given in the exam. 317. What is the time limit for investment in another house if you are purchasing the house after transferring one house in order to claim exemption of section 54? 2 years. Yes, if your long-term capital gains in this case is exceeding 2 crore rupees, then necessarily investment should be in one house in India. Acha, if there is investment in two houses in this case, where LTCG was 2 crores, above 2 crores, then can you take exemption? Answer is absolutely yes, but only for one house. Wonderful. Kashish, very good answer. Only for one house. Yes. Very good, Ankush. Very matured audience. Cream level. Very good answers. Higher. And if LTCG in this case was less than 2 crores, can investment be done in two houses? Yes. But it should be first time in the life that he is doing such thing. Only once in a lifetime he can get such opportunity. Okay, and mind you, these houses, whatever houses should be in India. So if it is outside India, don't consider for exemption. What is the ceiling limit for 54 EC? Exemption. Ceiling limit 50 lakhs. What is the time limit for 54 EC investment? 6 months from date of transfer. Which asset transfer is considered for 54 EC exemption? Land or building being long-term capital asset. Yes, it should be long-term. It should be land, building, or both. Yes, very good. Agreed, na? Which is that section which needs investment of complete NSC to get exemption of complete LTCG? Very good. 54F. Yes, if anything less than NSC is invested, then exemption will be on proportionate basis. Yes, very good. In which special case are we using the Manjula Shah case? Decision given by Bombay High Court. Yes, when assessee is selling that property which is acquired by way of gift or will. Wonderful, wonderful. So I hope you all are well aware of all the provisions now. I will give you full 27 minutes discount. In this time, before going to sleep, if you want to go through detailed example of particular provision, you are welcome to do that. Please do that. So let it sink in as you are sleeping. Let these all concepts sink in your mind systematically. Okay, and Shraddha ji, if possible, you please solve MCQs on this. All executive students, make sure that you are solving entire Taxman Cracker. Don't leave a single question from Taxman Cracker, because I have got a feedback. I'm not saying this because I have authored Taxman Cracker, but I have got a feedback. Those who solve each and every question from that will compulsorily get above 55. For CA Intermediate, I have not authored Taxman Cracker, but Aditya, what I would say is, for CA Intermediate, you kindly cover all questions from MTP, RTP and module and past exam papers. इससे सब cover किया ना, so there is nothing, because finally that's what I have put in the cracker, Taxman Cracker. So if SSC gets exemption of two houses under 54, he will never get exemption of even, no, for one house he can get, but that facility of exemption for two houses is lost. Okay. Sir, for unlisted shares, tax is applied on capital gains at what rate? Normal rate. Normal means, normal if it is long term 20%, short term then normal rates. Okay. Yes, slabs. One facility is there. That facility is that if you sacrifice the benefit of indexation, then you may pay tax at 10% instead of 20. So in short, you will pay at 20% by taking benefit of indexation, or at 10% without taking benefit of indexation. Special facility for unlisted shares. Okay. Yes. Now one more thing I want to tell you. Long-term capital loss, any long-term capital loss, it can be set off only against long-term capital gains, and if it is to be carried forward, it will be carried forward for 8 years. And short-term capital loss can be set off either against short-term capital gains or long-term capital gains, but against no other head of income. Okay. And if it is carried forward, carry forward is possible for subsequent 8 years. Agreed, all of you? Very good, very good. So I hope that this session was fruitful. As usual, you kindly give me feedback before sleeping. 20-25 words feedback will be fantastic thing. So that's it for today. Tomorrow doing advanced tax and TDS. Can be asked for CS professional level also. And day after tomorrow doing total income tax liability questions, in which we will try to cover AMT also, alternate minimum tax. So all of you kindly attend both the next sessions. And those who are watching recordings, do keep me know on my WhatsApp that yes sir, I am watching recording. Okay, do let me know so that I get assurity that all of you are taking advantage of this batch. Chalo, thank you very much. Good night. Stay positive, stay blessed. Bye bye.